We have seen a lot of companies labeled too big to fail in the past year, but there's one major lender that's still waiting on a verdict, and it's causing some drama for the company's bond investors. Bloomberg reporter Caroline Salas is with us. And Caroline, what's the story here?
Well, CIT is a lender that became a bank holding company at the end of last year with an eye towards getting a federal bailout. They did get $2.3 billion in TARP money, but as part of the bailout that they were hoping for, they applied to use the FDIC's program to sell government guaranteed debt. Now it's already July and they still have not gotten approval to do that, and there's no indication that they necessarily will. So as a result, this is a company that whose bonds are yielding more than 20% in some cases. That's a prohibitively high cost of funding.
Is this why some bond traders are betting that CIT might fail?
Exactly. They have $10 billion of debt maturing through the end of next year, and they have no access to the unsecured bond market. So essentially, they need the ability to sell cheap government-backed debt in order to refinance, and they haven't gotten that yet.
So why hasn't the FDIC given that approval?
That's a very good question. There's some speculation that the FDIC doesn't want to take the credit risk of CIT, which has now been downgraded to junk. It's no longer investment grade, and that's the reason. But nobody really knows at this point. There hasn't been a clear criteria for what you need.
And as you mentioned, it is already July, so
Exactly.
Things obviously not looking good going forward. How long are analysts giving the company to survive?
Right. Well, so the FDIC program expires at the end of October, and Fitch has said that CIT can meet its debt obligations through the end of this year, but they have a $2.1 billion credit line that expires in April, and that may be the determining time point.
And without access to the bond market?
Right, exactly.
Might be a moot question here.
It might be a moot question. The company is, using cash on hand, and they are, they have a credit line that they can use to help refinance this, but at some point they do need the ability to borrow again.
Caroline Salas on the CIT story. Caroline, thanks.
Thank you.